All right, so I'm getting several questions about the starting points of these mathematical um, sequences and stuff. So I'm going to show you real quick and give you a quick explanation in simple bar forms 1, 2, 3, 4, 5. We are in the third 1,000 year in a 5,000 year bar. Okay, from 0 to the year 5,000, we are at the open of, we are 26 years into the 3,000 year bar. Okay, and so we want if you see my previous video with a little Tesla diagram, and I talked about 1 through 9, and it's kind of sandwiched between 0 and 0, like 10 equals is equal to 0, 100 is equal to 0 in that same sense, and so is 1,000. So 1,000, 100, 10, and 0, they're all equal. They're all the same in the forms of counting, okay? So what that tells you is the entire bar of the year 2000 had to close, right? So that's what we're going to focus on, is that point right there. The entire year closed, and now a 1,000 year bar opened, okay? And these are the dates for the months. Like, we'll start the months from here. We will start the weeks from here, and we can start like a 25-year bar from there, right? And count 1, 2, 3, 4, 5, and then 5 bars of 5, and that gives you 25 years, right? So, and aside from this, isn't a point in which you'd start a you can start a 125-year bar sequence from here, but there's a better point in which to do that, and then I'll explain that um, and get you some clarity on that so that you don't have to worry about it. So this is the month and the week start right here. You can, and you could count some years here for some basic understanding and not have to know which 25-year bar you're in the perspective, but know how to trade a 25-year bar with 5-year bars and 1-year bars in there. So um you know but technically right now, 25-year bar has closed, and we are in bar 2, 25-year bar. So that would be like Tuesday of the week, right? Say a 5-day work week, 5-day trading week. Tuesday is bar 2. 26 open is like Tuesday. Okay, so anyway, we'll get back to this. So start point here, and at the open of January 2001, and we would run that through current, right? So you can still see, even in this form, 1, 2 bars back open, right? You can see over here, this bar is bouncing off of like around in the 2 bar back close here, that kind of area there. And anyway, you get the general idea. And we are up here on DJI. Right now, we are bar 3, bouncing on the bar 1 high, open, high, low, close. And so, yeah, that's it. So what we'll do is, you see this current date here, December 16th of 24, and let's go back here really quick. And I think Bitcoin's charting started at 2015 or 2015 right now. Yeah, so we got May 18th. All right, so let's go ahead and switch to the Bitcoin chart real quick and just show you that I've transferred that over. Okay, so here's May 18th of 2015. That's my open. So this is my open, low, high, close. Bar 3 bounced off bar 1. Bang, sequence is already live, okay? Biggest move that made it all happen is all from that point right there, right? It all started from there. 3 parts of this became fractal. This right here would be 3 bouncing off of 1. Bang, right? Yeah, it may not be that. I mean, it probably is, but I don't have it charted like that to where I can see it clearly, and I'm not going to go through it right now. Just showing you the point in which I have transferred this over and then laid out the sequence. So STRC doesn't have much time on it, and so I use that as an example in one of my um, responses to a question I got. And I'm just transferring over a current date of this sequence, and then bang, just if it's got that date, label it on the chart. Bang. Now you know the sequence, and you know where this one is ending and which one it would be. Carry over the sequence, right? Just carry the sequence over to this. Do it for the months. Do it for the weeks. I'll show you a month from there as well. Just give me just 1 second there. Let me get switched over. All right, this is my 125 month chart here. Let's go ahead and get it to the right time frame so you can see it better in that aspect. So you can see it is January of 01. The same thing, open a 2,000 year bar, 125 month sequence, right? And that's how this is. And then if you want, there's a lot of stuff that's going on down here at the bottom, labels wise, but I'm not going to get you guys lost into that. That's pretty advanced stuff right there, but you know, and there's a lot of stuff we can do with it and understand by it. But anyway, you know, this is pretty much it. That's your monthly sequence there. Those are your dates. You just transfer them over to whatever you're doing, and so um, you'll get the same type of reactions. We've got major bar 2 outside of bar 1, and we landed on the high. And in the very first bar high in this sequence here, bar 1 and bar 1, right? And so it turned out to be it's the bar 1 high, and bar 1 high. So it has power, right? And so we landed on both of those, took off. All right. And so that's your sequence, and that right there is what you would switch over for your monthly stuff here. Now, whenever you're doing weekly stuff and you're transferring over like a weekly date, just know that on DJI going to Bitcoin, the days can be a little different here and there, but it's the open of the week that if it's missing a day or something like that, it's the open of the week, even if it's a different day, right? It's the open of the week. If the pink bar lands there on that week open, it doesn't matter if it's missing a day, like Monday's not there and Tuesday opens, and Bitcoin opens up on Monday, open up Bitcoin on the day it's on the open of the week, and then label out the one that would be short on a day still open. That's the open of the week. So you're still doing a weekly sequence, and that's the open of the week. So that's what you want to make sure that you're paying attention to. So these are the things that you would carry over. These are the dates, and you just run your 125 and then 250, 375 month sequences from here. So you know that's how you'd know everything. Um, yeah, that's pretty much it. It's not a crazy process. We're just switching over information, getting it to where we have the current data, and then we get to trade what the chart gives us between these lines. They will give you structural stuff between these dates, and we need to learn how to trade the structural stuff and this numerical system that I'm giving you guys. 2 bars back, you know odds and evens. That's pretty much it. You guys are starting to get a little bit interested in it. I can tell by the comments they're actually getting pretty interesting. So I'm really happy to answer the questions that you guys have, and I'm just trying to make sure that everybody's getting the same information the exact same way, right? So that you know that's it. We're just taking this stuff, we're transferring it over, right? And that's it. So we can do the 125 month, 250 month, 375 month. So what you see here is November 1st of 2021. Now we'll go look at Bitcoin. All right, here we got Bitcoin, and you can see that this is my sequence here. This is what date I would have for my 125 month, 250 month, and that'd be my starting point there. So this is a 125 first bar. This will be a 250 first bar if you paid attention to the sequences and stuff. And so you'll see how this all works, and then you know you'll start to see how it works and how it works its way through, and it still does everything like it should. 2 bars back, odds and evens, the exact same sequences. These are just monthly setups here, okay? So that's pretty much it. You're just looking at, here we go, the drop on Bitcoin. It's bouncing off the 2 bar back closing level there. So it's not really doing anything crazy. You see this bar here, 2 bars back, bang, previous bar. So the previous bar trades, like I've said in other videos, they are kind of combined with this. We focus on this because we're told to pay attention to, like, in common trading knowledge out there in the market, we're just like previous day high, previous day low, previous day close, and trade that. But that's the middle bar. That's the bar you can kind of ignore, and then this bar moved it, set the range. This one acted like it was going to do something else. This one pulled back within that range. So that's how it's working. Bar 4 off of bar 2, close, boom, right? It's doing the same type of stuff all the way up. This bar, 2 bars back, previous bar, high. So what is a trade, right? High of the day. Well, what part of the day did the high come into? Was it in the first 12-hour bar? Because that's the high of a 12-hour bar. And if it's in the first 12-hour bar and hit in the second 12-hour bar, technically that would be like a high of a day, right? Although it still would be the high of the day. Put it in the 12-hour bar and hit it in the same 12-hour bar. It may put in the first bar, second bar, be fake out disruptor, third 12-hour or 4-hour bar, boom, in the 12-hour bar, dump, put in a high in the first 12-hour bar, come up and hit it in the next one. So we've got a high of, which would be like a high of day short, right? And because it appears to be on the left side, right, of this bar, that would be equivalent to saying that'd be the first half of my day. So that'd be a high of the first 12-hour bar, and this would be equivalent to like a 4-hour bar, an inner bar in the middle, and then the third bar hitting it and shorting. So high of day, high of a 12-hour bar, previous day, but it's the 5-month bar set up here. So high of a 5-month bar, this will be 1, this is 3, bang, and then this is the previous 5-month section there. And so we broke it and then went back here, right, to 5-month bars back and came up under it and dumped. So that's pretty much it. You're just swapping over your sequences and stuff, and then you're just laying out what it gives you. You can separate this stuff a little more, like here. Why did Bitcoin long this time? Well, because we got a low of this month here, right? This is the third month. 1, 2, 3. So bar 4 is going to be seeking bar 2 levels first thing. And so down here at the bottom, we've got the low of the month trade. And what did it give us? Well, look at there. We hit it and we got 2 bars back on the day. Swing failure. 1, 2 bars back, long. Boom, 2 bar back again. Off that level in bar 3. And now we are technically inside. We have not broken a larger level in this mathematical perspective. So the previous high, low, and close, the closes are open. And so you've got the whole open, high, low, close of the previous bar. That is the fake out disruptor bar, if you will, right? Now the next biggest move is going to be coming through this when 4 starts reacting to 2, because this bar was inside of this bar. And now we're currently we are inside of an inside bar. So you don't really know what that means yet, but if you've ever seen inside days, it'll have the same type of reaction. Okay, so we got the inside month set up here. We've got the low from the previous. We got our current low, high low, and open close. Right. So clearly it didn't hit this. This is my high. This is my open, my low, and my closing level. So we didn't break it. So this is what's caused these movements here. We've come up towards this. We've pulled back off 2 bars back. Boom. And then we took out 2 bar back low. So right now in this perspective, we're hanging out. There is no trade. We haven't broken a high or a low or touched one of these levels to be getting too excited, right? But so we can hit this, dump down, bounce off this, and then run up here towards this. There's a lot of things that can happen. And we are in this bar in the 125-month bar setup, looking 2 bars back. And we are playing with that level. We're back up underneath it. If we break that level, this is my open of my bar 1 here. Biggest reaction on Bitcoin in that perspective, in monthly bar perspective, is going to come after this. This will be like bar 2, like a Tuesday reacting to a Monday. Okay, so that's when the next biggest setup that's going to happen to Bitcoin is going to mathematically happen. not talking structural wise and how this thing may play out. Time period wise, it's going to be open, high, low, and where this closes. Those are going to be the next biggest levels to make Bitcoin do anything. So, and then when this bar opens, we are then going to be playing against 2 bars back. Open, high, low, and close. Okay. So that's how it's going to go. That's what it's doing. Yeah, it'll do this stuff forever. So in this case, we could say over here in the previous bar, this is going to be bar 1 high. And over here, we're going to be at bar 3, hitting at bar 1, and bar 3 landing at bar 5, like kind of numbers, odds, boom, right? I mean, we can look at this in so many ways. But the main focus I want to get you guys to understand isn't to be doing stuff and doing math. It's to be understanding that these are your parameters and how to do it in a higher time frame perspective, from month bars down to weekly bars down to daily bars, and intraday stuff if you want to do that. But the point is this is long-term swing trading. So we would have shorted under previous high in this perspective and 2 bars back and been shorting towards this low and towards this low, right? And that right there is the perspective towards these bigger targets. We would know that because it laid out and showed us the sequences of what was most important. This is a previous 125 month, 250 month bar, and this is my high and my close of those. So we are bar 3 bouncing off of bar 1 open. This means that in that perspective, we have went to a closing type level, and the theory is we will run towards a closing level perspective in the higher time frame maths, but we got to get through all this stuff first, right? So, in the weekly perspectives, it's coming up. I think it's the end of this week. We should be hitting a important thing that should start making some stuff happen. And then that will cause the reactions in this area here. And that will lead us to what's going to be happening after this bar. Okay. So we're just transferring over the dates from something else. If it's something new, it doesn't have anything on there, we just transfer it straight over to it. We lay it out in the sequences that we know will be coming, as everything is put into the same accounting system. TradingView is an accounting system. It does not matter what you put in here. You could be talking about bubblegum. It does not care. It is a value, an overall value of a market structure, time based mathematics that it has to function on. It is mathematical boundaries. That's why I said to go look at the Paul Diroc video with Veritasium, or and his antimatter explanations and stuff, to get you to understand the space in between. Is, so you see this bar moved it down, it took off down, boom. This one acted like it was going to continue, right? But it didn't. It just jumped right back up in it. And what did it do? So it was a disruptor. So if I take this box and I just block it off, right, and I don't even look at it, you'll get the general um, understanding of what I'm saying. Like, this bar means in that perspective nothing. It does. It helps us understand stuff, but this bar was the temporary space in between. This was like it shot down to, say it was a wall and it was going to ricochet, or a floor, bang bang, right? It came down, boom, and then this was a temporary space in between in terms of how long it takes to get this going and to do his thing. So 4 bounced off of 2. Okay, that's, we do have data and structures in here that we can trade, but in the larger mathematical perspective, if I come down in here and I lay this out, you would see that I'm getting back over. You can go chart this out, and you'll see that this will be doing the same type of functions. We'll be getting back over 2 bars back type of stuff, odds and evens. you know it'll keep doing it. So um yeah, that's pretty much it. There's not a lot to it. You're transferring over the information, and that's it. So, and then charting it all out and understanding that this open, in different perspectives, that this is bar 1, bar 2, bar 3, bar 1, bar 2, bar 3, you know, and then you've got your little bitty bars 1, 2, and 3, right? So each one of them are, you know, it will work, and all the sequences works for every bit of it. So in these trades, it's open, high, low, close. It's a like the day of the week, right? Open previous day, open, high, low, close. 2 bars back, open, high, low, close. You know, you got a week you're in, previous week, open, high, low, close. 2 bars back, open, high, low, close, right? And now we're in these larger math sequences. So it's, you know, 5 week bar, open, high, low, close. Previous 2 bars back, right? Now you're talking about these 2 bars back. So if we're trading in this perspective and it's broken one of these levels, then our thesis is that, you know, that it could be trying to come back down to this level, and but understanding that these mathematics are what makes you think when it hits this, it's going to always run down there, but it sets up these things, and you can keep up with it in many different forms from these points, and it will do this forever. It doesn't have a choice but to operate this way. You cannot move the numbers to where you cannot do this. It's impossible mathematically. They can try it all they want. You could try to defend that all you want. You just can't do it. If you understand math, nobody with math is going to argue this point. A math background is going to argue this point at all. They're just, they understand. What they may not understand is how things flow through odds and evens, but you know, they really do flow through it pretty well. So yeah, this is it. Um, oh yeah, we'll do a 125 year sequence real quick. Or maybe I'll do it in the next video. I'll tell you what, I'm gonna hold out until the next video on that one.